Hello, trader. Welcome back to this video today. And in today's video, we are going to talk about the time frame, which is quite important when it comes to trading. So what we are going to talk about today is how to do the multi-time frame alignment. So kindly, if this is something that you would like to learn, I would urge you to stick up to the end of the video and make sure you learn something from this. So you can take a piece of paper or a pen and make sure you write something, because remember, here we are learning, guys. So before we begin, let me take this opportunity to thank you guys uh, for viewing my videos, for liking my videos. So if you've been watching my video, so thank you very much. So if you haven't subscribed to the channel, kindly I will urge you to do so. Make sure you subscribe and don't forget to turn on the notification bell so that you may be notified immediately I upload a new video. So without a further ado, let's get started. Now, when you talk about the time frame alignment, remember, we do analysis depending on the type of trader that you are, guys. So if you are a day trader like me, there are those specific time frames that you must look out for before coming to any conclusion of taking any trade. And if from the chart or from the screen, you can see very clearly I have a table here with me. And on my right, I have different types of traders here, because the only thing that differentiate these traders is the time frame. Because remember, we all have a different test when it comes to trading. There are those people, they like doing or according to their situation that they are, they can't do a swing trading or a day trading or scalper, so they have to be a position trader. Because a position trader, this is a type of trader who is really quite busy, doesn't have time, or she doesn't have time to be on the charts. But if you are a day trader or a scalper, that means you have time to look at your charts and for you to execute trades. So for the position trader, this is a trader that will hold a trade for weeks, if not months, sometimes even years. Then we have a swing trader. For a swing trader, this is a type of trader that will hold trades for days, if not weeks. Then you have a day trader like me. A day trader, this is a type of trader that will hold trades for only few hours. That is, for me, I don't like holding trade for at most 24 hours. That is one day. So you just hold your trade for less than a day, 24 hours. Then you have a scalper. A scalper is a type of trader that they jump in and jump out of the market within seconds and sometimes within a few minutes. So they don't have to wait toward the market for a long period of time. Now that you have looked at these type of traders, let's look at their time frames. Starting with the position trader. So this type of trader will start their analysis from the monthly time frame. Then they shift to, and kindly make sure uh, uh, you emphasize on this time frame that I'm talking about. So make sure if you are a position trader, you start your analysis from the monthly time frame. Then you go to the weekly time frame for you to refine your analysis. Then this is where you do your execution, guys. You execute your trade on a daily time frame. So this is where you do analysis. You start by looking for your buyers from there. This is where you identify your buyers. You go to the the mid time frame. This is where you mark your point of interest, or you refine your point of interest that you have marked from the higher time frame. Then now this is where you do your execution. For the first one, first column, this is where you do your bias. This is where you mark your point of interest. And here, this is your execution. You wait from the daily time frame, if you are a position trader, for you to execute your trades. Now, switching to the swing trader, you start your analysis from the weekly time frame. Then you refine your point of interest, or you identify your point of interest from the daily. Then you execute your trade on 4-hour time frame. And sometimes, if you don't get the clean structure from the 4-hour time frame, you can do so on the 1-hour time frame. Then you have a day trader. This box that I've highlighted here. We start our analysis from the daily time frame. Then you go to the 4-hour time frame for you to refine your point of interest. Then this is where your execution should be, either in 15 minutes time frame or in 1-hour time frame. You can also use the 4-hour time frame, 1-hour time frame, and then your execution at 5 minutes time frame or 15 minutes time frame. Then you have the scalper here. And guys, don't listen to those type of trader that will tell you that you don't need to do the bias, guys. Bias is a must for every type of trader. You need to get a clean bias. You need to identify the trend of the market, because how can you tell me that you are just going to execute for a buy or a sell if you don't know which side the market is trending to? So you need the bias, or you need the higher time frame bias for you to execute your trades. Then you have a scalper here. A scalper will do analysis from either 1 hour, 15, and then they look for entry at 1 minute time frame or 5 minutes time frame. Still, they can also do the analysis from the 15 minutes time frame. Then at the 5 minutes time frame, they refine their point of interest. Then they execute their trade at 1 minute time frame. Now, I believe now you have understood everything that is illustrated here in our charts. Now we are going to go to the charts and do an examples on how to do this analysis. And I'm going to do the example from each of the follow each of these time frames, or each of these types of traders here. Now we are just going to pick any chart randomly. Now, if I'm going to use, let me use the which chart? Maybe uh Euro JPY. Let me go to Euro JPY, and I'm going to start from the swing trade or the position size trader. Let me go to monthly time frame. We are on a monthly time frame on this chart. Believe in this chart, you are not going to get a lot of information. Okay. We are not getting a lot of information on this side, guys, but we are just going to focus on what we are having currently here. Now, starting down here, you can see very clearly that we are bullish. We are bullish on this chart of the higher time frame, that is the monthly time frame. And if I can focus on this side, you can see here, we cannot say that this is a break of structure because this month has not yet closed. We have 15 days and 16 hours to go for this candle to close. So you cannot say that this is a break of structure. So the only break of structure that I can see here, it is this. So this is my break of structure here. So that is my break of structure. You can see it's a good break of structure because it swept liquidity below this low and also below this low before pushing to break this high. So after doing so, you know very well, you will pick your Fibonacci tool and place from swing high to the swing low. And now this is the problem when it comes to this type of trader, because now tell me, for how long are you going to wait for this market to come to the discount for you to look for a setup there? This one can take years, guys. But the point is that I just wanted to show you how to do this analysis. So just forget about uh, the time frame and focus on how this kind of trader will do the analysis. Now, after identifying the swing high and the swing low, of which here we cannot conclude that this is a swing high until we see the market is willing to pull for the pullback. This is not a swing high yet. Now, assuming that this is our swing high and this is our swing low, so that means you have to wait for the market to come to the discount for this type of trader to start looking for buys. But now, if you look at down here, we cannot see any valid point of interest. The only point of interest that you can see, it is this last sell before the buy, that candle down there. That is our demand zone. Sorry, I think our demand zone is not visible on the day on the monthly. So let me make it visible monthly like that. We go back. So this is our demand zone down there. Now we can go to the weekly time frame and look for other point of interest. You can see very clearly here on the weekly time frame, we have this point of interest down here, which is a very nice point of interest because we have this demand zone down there. So there's this guy that asked me here on the comment section that how do we mark the point of interest? That is how I mark my point of interest, guys. I like to use the last buy candle before the sell, or the last buy before the sell. It depends on the trend. If you are bearish, that means I look for the last buy before the sell. If you are bullish like here, I like to use the last sell before the buy candle. And sometimes if that one is not clear, I can also use this candle like this. The only main point here is I need to see a fair value gap. That is the main point when it comes to marking my point of interest. So now I will have these 2 points of interest now from the weekly time frame. Remember, we have done our analysis from the higher time frame, that is the monthly time frame. Now we have shifted to the weekly time frame for us to refine our point of interest. And we got these 2 points of interest. Now this was our monthly, so we can refine it to this weekly point of interest like that. Now, the next point is that you will just go to daily time frame for you to do what? After marking your point of interest from the weekly time frame, sorry, now you wait for the market to come to your point of interest. Are you getting? You wait for the market to come to your point of interest. Then when that happens now, you look for your entry. And where is your entry coming from? Your entry should come from the daily time frame. I don't know whether you are getting. You wait for the market to come to your point of interest. Then after that, you look for your trades. Are you getting? Now, we are done with the position size trader. Now, let's go to this type of trader that we call the swing trader. The swing trader will start the analysis from the weekly time frame. Let me delete this. We'll start the analysis from the weekly time frame. I can use a different chart. Let me use which chart? I can use the Euro USD and use the Euro USD like this. Let me delete everything. Now we have this type of trader, which is a swing trader. We start our analysis from the weekly time frame. And what do we see from the weekly time frame? You can see very clearly that we are trending bearish from the weekly time frame. I don't know whether you are getting, because we have this break of structure here. Sorry, we have this break of structure here, and we have this break of structure. So this is the last break of structure that you can see here from the weekly time frame. We have that break of structure. So after identifying our break of structure, what else do you need to do? You pick your Fibonacci tool, you place from the swing eye. Remember, this is our swing eye. This is our last eye that was printed before the market pushed to make this swing low. So we have like that. Now, after identifying this, remember you are bearish. So that means you have to mark your point of interest at the premium. And this is where we have the premium. So you can use the same time frame for you to mark your point of interest. And where do I see the point of interest? Now I have this. You mark this. That is your first point of interest. You also have this point of interest here. And also we have this extreme point of interest here. So all these one are supply zones. We have this is our supply and this is our supply, like that. So we have those point of interest. Now we shift to the daily time frame and see whether we can refine our point of interest. The idea of going to the mid time frame is for you to refine your point of interest. And I don't think whether there is any point of interest that you can refine here. Maybe this one you can refine to this candle, this small candle here, like that. For this one, I can refine it to this, like that. We have a small fair value gap. Then for the extreme, I can leave it the way it is because I cannot refine it further, like that. Now you extend them like this. You extend them like this. And what do we see, guys? And what do we see? You can see very clearly that when the market tapped to this point of interest, the first point of interest, you can see very clearly, it had a reaction from here. Market reacted from here. So maybe you could have got an entry from this first tap here to push the market to the downside. First, market came again and reacted from that point of interest. Then you can see currently the market is now reacting from this point of interest. Now, this point of interest, let us assume that when the market tapped here, you wanted to look for your entry. Now, where is your entry coming from? You go to the 4-hour time frame. Let me go there. Now, when you come to this 4-hour time frame, what do you look for after the market tapped here? After the market tapped here, you will wait for a change of character, guys. You wait for a good change of character. And unfortunately here, guys, market never gave us a good change of character because what type of change of character do I need to see? I need to see, remember I gave you the checklist. If you haven't watched the video, make sure you visit the channel. The video is on the channel on how to identify a valid change of character and break of structure. I need to see a sweep of liquidity before a break of structure. Then after that, I need to see a change of character. Here, there is no inducement that was served here. So I cannot say that this was a strong break of structure. So here, I don't have a strong change of character, sorry, not a break of structure. So for me, I will not say that this is a valid change of character. Are you getting? So if this swing trader trades like me, like my strategy that I use, so I will not execute, assuming that I'm a swing trader, I will not execute this setup. And if I go to maybe a 1 hour time frame, I don't think whether there is a setup there also. Even if I go to 1 hour time frame, you can see here this was the inducement that was not swept by this law. So I cannot say that this is a change of character. And even if I look up here, I don't have any inducement, any good change of character. There is no any good change of character. So I will not execute that trade. So that means now for this first POI, this one is invalidated. And where did this point of interest get invalidated? When the candle closed above this point of interest. When you see a candle closing above your point of interest, that means that point of interest of yours is invalidated. This place, it is still valid because the candle never closed above it. It only wicked above it. That means market swept liquidity. But at this point, market closed above your point of interest. That means this point of interest is uh, invalidated. So I will delete that. Then I wait for the market to come to my next point of interest. And remember from the daily time frame, this is our next point of interest. So when the market comes and taps to my point of interest, what do? I shift to 4 hour time frame, guys. This is a swing trader. So you move from the daily to 4 hour time frame for you to look for what? For you to look for entries. And now here we go. Where do I have the last break of structure? And this is the last strong break of structure. I don't know whether you are getting, guys. This is the last strong break of structure, like that. After this break of structure, did we get the change of character? Very nice. We have our break of change of character, sorry. We have a change of character down there. You have a change of character. Why am I saying that this is the last break of structure? Because this break of structure swept liquidity below here before pushing to break the structure. So now this is our change of character. After doing so, what is this trader going to do? So you are going to pick your Fibonacci to place from the swing high to the swing low like this. After doing so, wait for the market to come at what? Wait for the market to come at extreme. This is our extreme. Not extreme, but at the premium area. Then you execute a trade from here. So I will this I will only mark the point of interest. Assuming now I'm a swing trader now, I'll mark the point of interest above the 50%. And these are 50%. So if I look here, do I have any valid point of interest? So exactly, I do have this uh, consolidation before the push to the downside. We have this consolidation like that. That is how I'll mark my point of interest. We can also refine to this candle here. You can also refine it like this. This last candle before this fair value gap. And you refine it at this and that way. I can mark it at supply. So what will I do now? You just take your you place your limit order at this point. Then you can see this eye here. Remember, this is a kind of liquidity here. So make sure your stop loss is above here because I don't expect the market to push all the way up here. There is no need for a market to come all the way here. So make sure your stop loss is above, some few pips above this eye, like that. You always make sure you give a price some breathing space. Don't put a tight stop loss. then where will be your take profit? Your take profit should be here. That is your first target. That is where your first target will be. And if I go to the weekly time frame, that is where your first target will be. Your second target should be this low down there. Now this is your last take profit. I don't know whether you are getting the idea when it comes to the multi-time frame market analysis. So that is how a swing trader will do its analysis. Are we together up to there? Now we are going to shift to the next type of trader. We are going to shift to the next type of trader, which is what? The day trader, which is me and you, whereby we start our analysis from where? From the daily time frame. Now, assuming now I have come to the chart, I will not delete this point of interest because that is where the market is reacting from. I believe you understand this point of interest. So I let it be like there. Now, let me now delete everything else here. Let me delete everything else here. Let me have a clean chart like this. So what do I have here? So assume now that I've opened the daily time frame chart. So what do I have? So this is my last break of structure. This is my last break of structure like that. So I can also delete this. That is my last break of structure. Then you can see very clearly market swept liquidity down here. So this is a liquidity low was swept. So after doing so, what do I do next? I pick my Fibonacci tool. I place from the swing high to the swing low like this. So after doing so, what do I need to do? I need to mark my point of interest that are below 50%. And this is my 50% of the Fibonacci. So I need to mark the point of interest at the discount. And what are my point of interest here? I have this order block like this. That is my order block. That is my demand zone. I can remove this Fibonacci tool now. That is my order block. So what do? I go now to 4-hour time frame for me to check whether I can refine my point of interest. And if I refine it, I'll have this candle down there. This small candle like that. That's my demand zone. So my idea now is waiting for the market to come to this point of interest. So I can decide to capitalize on this pullback. But remember now market has already tapped uh into the premium, into the discount, sorry. So it's risky for me to look for sales to this point of interest because market can decide to react from anywhere at the discount. Market can decide to react from anywhere at the discount. See, this is now the 50% started from here. So and you can see very clearly now the market is reacting from this candle here, this small demand zone or an order block down here. You can see the market is reacting from this order block. Of which, if you go to the daily time frame, you see very clearly we have this inverse fair value gap. What is inverse fair value gap, guys? It's a fair value gap that fails toward the market. Remember, when we were pushing to the downside, this fair value gap was left here. I don't know, I can mark it like this. This fair value gap was left here. So ideally, we were expecting when the market pulled back, we were expecting the market to react from this pull, to fill this fair value gap and then continue pushing to the downside. But unfortunately, market pierced through this fair value gap. So now that makes this fair value gap an inverse fair, fair value gap. So we are expecting the market to come back to this fair value gap, then react from it. So that is why I can now say that this reaction from this demand zone is not that strong. Maybe it's a pullback for the market to come to a certain area here, then continue pushing down. At least I should see the market come to this fair value gap before now uh, start pushing all the way up to this area here. But now from the remember from the weekly time frame we have seen very clearly we are what? We are bearish. So there is a high possibility that the market this point of interest will not hold. Market can just have some small reaction here, then continue pushing to the downside and break this low. I don't know whether you are getting or I'm confusing. So I know these contents currently might be confusing you, but trust me, uh, just continue. Make sure you watch this video uh, time at a time, and I can promise you it will just make sense. So, in trading, it's just learning, guy, and learning is a process. You don't expect to just learn something at once, then you understand everything. No, learning is a continuous process. Just learn a little by little. Don't rush the process, guys. Are you understanding? So sometimes the learning process depends with your how quick you understand things. Because there is someone who can just start learning trading now, and within the next 3 months, 6 months, that person is good to go. But there are those people that this journey can take them even 5 years, 4 years, others in almost 10 years before you start uh, mastering. So it depends with how you understand, how quick you understand, and maybe uh, depends on how you are learning, yeah, or who you are learning from. Are you getting? And don't jump. Don't learn so many things at a time. Just focus on one thing. If you want to learn my strategy, don't just start learning this, then you go to the next mentor, you start learning new things. Just focus on what I teach only, because I like to make my strategy as simple as possible. I don't complicate anything, guys, here. And I always make sure that my strategy is as simple, even as a small kid can learn and understand how I trade, guys. Now, that was just a by the way. So, what was I saying? Remember, we are coming from the weekly time frame, and the weekly it's bearish. So, market can decide to, but down here we must have a reaction because this is a strong low, guys. If the market has to come to this demand zone, we need to have a small reaction. If this low now is not strong enough to hold, we'll have a small pullback. Then after that, we pull to the downside. But that is not what we are trying to learn from this. So what was I saying? From the 4-hour time frame, I was saying now I can decide to capitalize on this pullback as I wait for the market to come to this demand zone of mine. So what will I do? I will look for the break of structure as usual. You can see here we have a break of structure. We have a break of structure. We are on a 4-hour time frame, and this is where you are supposed to execute your trade. So this is our 4-hour time frame break of structure. Now, what will I do? I pick my Fibonacci tool, I place from the swing high to the swing low like this. Then I wait for the market to come at the discount area. And this is my, not discount, but the premium. This is where I will mark my point of interest. And which point of interest is visible here? We have this order block here. That is my supply zone. I can also refine it to this candle here. Then I also have this gap. I don't know whether you are getting. I also have this gap here, and which will be my This is what I will be much interested to execute my trade from. We have that gap there. What gap am I talking about? If you look here closely, you can see here the body of this candle and the body of this candle are not meeting. There is a gap between the body of this candle and the body of this candle. Because we expect to see, for example, like this candle and this candle, you can see the body of this candle and the body of this candle, there is no space in between. So whenever we have this space in between, that now becomes inefficiency. So we expect the market to come back and fill this gap. So this is a gap which we expect the market to come back and fill that gap. So if I was to execute this trend from the 4-hour time frame, that is where I'll place my order. This is where I place my order like this. This is where I place my order like that. But remember now this is a day trader. We are talking about a day trader. So I don't have to execute my trade on a 4-hour time frame. But now that, let me deal this. Now that I have my point of interest there, now what do I do next? I just need to wait, guys. Patience, guys. Patience. Wait for the market to come to your point of interest. So just sit back on your computer and wait for the market to come here. So what do I do? So for some most cases, remember here I have this order block is also valid like this. So what I like to do when I have 2 point of interest like this, what I'll do, I'll set an alert at this area. I set an alert at this area. When the market comes to this point of interest, if the market crosses my line or my alert, then that is now when I open my chart and start looking for my entries. So you wait for the market to push to this point of interest. Then what will I do? I'll go to uh, 15 minutes time frame for me to look for an entry, a change of character for me to take a sell to the downside. I believe you have understood, guys. That is how we do analysis as a day trader. You can just apply the same thing on starting from the 4-hour time frame, refine your area on 1-hour time frame, then execute your trade at 15 minutes time frame. And I don't think whether I have to do the same thing on I don't think whether I have to do the same thing on a scalper trader because the process will just be the same. So just repeat the same process that I've shown you guys so far on the position trader, swing, and a day trader. Just repeat the same process. Are you getting? Repeat the same process until you understand how to do the multi-time frame market analysis. So this is what is important on this video. So make sure you screenshot of this table or you can just write it down and then put it into practice, guys. Don't just assume that you have understood from what I have taught you. You need to put into practice. You need to go to the chart, make sure now you can do this analysis by yourself. That is how you test yourself whether you have understood, guys. So thank you for watching this video. So as a reminder, if you haven't subscribed to the channel, kindly do so. Make sure you subscribe. Then I'll see you on the next video. So until next time, it's a bye bye for now.